$102. That's the psychological threshold everyone's watching right now. And once we break through that level decisively, I believe we could see $165 happen within weeks, not months. Hey everyone, welcome back to the channel. Today, we've got something really special. I'm here at a local precious metals dealer, and we're going to talk about what's actually happening on the ground level with physical silver as prices approach levels we haven't seen in over a decade. Right now, as we're recording this, silver is trading at $33 per ounce, and gold is sitting at $2,870. That's an all-time high for gold. And silver is trading just a couple dollars off its all-time high. Depending on how you measure closing prices versus intraday highs, both metals are essentially at record territory right now. Make sure you smash that like button right now, drop a comment below with your thoughts on where silver is headed, and subscribe to this channel because what we're about to discuss could change how you think about this entire precious metals rally. So I'm here with the owners of this shop, and I want to start with a fundamental question. If you were talking to someone who was brand new to precious metals, someone who's never bought an ounce of silver or gold in their life, and you had to explain to them why these metals are going up right now, what would you say? There's really a combination of factors at play here. You've got global economic uncertainty, concerns about geopolitical affairs, ongoing conflicts in various regions, political tensions between major powers, Federal Reserve leadership transitions, and this underlying sense that even though economic data says things are improving, people aren't feeling it in their daily lives. Trust in paper currencies is declining. All of those elements are combining to create what I'd call a frenzy in precious metals. And the frenzy itself becomes self-reinforcing because you're seeing people who would normally never consider precious metals walking into shops like ours saying, I don't know anything about this, but I want to invest in gold and silver. There's an entire new universe of people joining the precious metals community with varying levels of knowledge, and that's putting pressure on available supply, which naturally drives prices higher. I know demand must be intense because I've heard that the largest bullion dealer in America just instituted a $500 minimum order. You literally cannot place any order at all if it's less than $500. Isn't that kind of remarkable? Well, it's probably a logistics issue because their volume has increased so dramatically. The small orders, 1 or 2 items, there's just no time to process and pack them efficiently. It's unfortunate for the smaller investor, but there are still places like local coin shops where those small purchases should be welcomed. So if someone walks in here and they just want to buy a little bit of silver, they could literally buy 1 silver dime. Absolutely. No issue whatsoever. We'd be grateful for the business. What is the cost of 1 silver dime right now? 1 silver dime is currently $2.30. I have to look twice to make sure I didn't make an error when calculating. A lot of people remember when it was 35 cents for a silver dime. I remember watching videos years ago on YouTube where people would say, instead of buying a coffee, I'm going to buy a silver dime. Well, those days are gone. The thing is, no matter what the price level, demand keeps increasing. As much as we purchased yesterday and we bought well into 6 figures worth of silver yesterday, our display cases still aren't full. Let's take a look at the showcase and see what inventory looks like right now. And as we head over there, I have to point out there are hardly any Morgan dollars or peace dollars visible. One customer bought essentially all of them yesterday. We had them priced basically at melt value for the silver content. He couldn't pass that up. That was probably an excellent deal. It was definitely a good deal for him. So let's see what inventory we have available down here. We have some silver eagles, but I'm noticing there are quite a few proof versions. Are those priced the same as the regular bullion strikes? Yes, they are. Right now, you can actually get some good deals on premium silver because many of the premiums above standard rates for generic rounds and eagles have compressed significantly. we're selling them at the same prices because we have to buy them at similar levels. They're just not commanding the premiums they once did. Maybe we could pull out a proof coin and a regular bullion strike and show people the difference visually. Obviously, you've got all the special packaging and certification with the proof versions. Hit that like button if you're finding this behind the scenes look valuable. Comment with whether you prefer proof or bullion coins. And subscribe for more on-the-ground precious metals coverage. But while we're discussing this, one thing I want to bring up, the US Mint recently repriced all of their numismatic products. The Proof American Silver Eagles, for example, went from the mid-30s to over $60 per coin. What do you think about that repricing? Well, they have to build in substantial margins because they operate with higher overhead and want to maintain profitability. They don't want to get caught behind the market or constantly play catch up with silver prices. So you always see relatively high premiums on US Mint products. If you think about it, silver was around $9 to $12 per ounce for quite some time. And they were selling Proof Eagles at roughly 3 times spot price. Now it's closer to approaching 2 times spot. There's always been elevated premiums on US Mint products. They're one of the largest sellers. As some people say, they're the biggest coin dealer in America. And if I can just add something about the Proof Eagles, unless you specifically want the current year for collecting purposes, and I understand there are collectors who acquire these by year and mint mark, then you want the current year and you'll pay that $60+ price. But if you just want a Proof Silver Eagle without caring about the specific year, you can go to your local coin shop and almost certainly beat the mint's price significantly. Exactly. So if we look at these side by side, you can see the Proof version is essentially mirror-like. It's the striking process that creates that reflective surface. The regular bullion strike has a more standard finish. So just to clarify, if I wanted to buy a regular bullion American Silver Eagle today, I'd be looking at approximately $36. But if I wanted the Proof version, it would also be $36 here at the shop. Exactly, same price for both. But if you want to purchase it directly from the US Mint, it's over $60. So it's clearly better value to buy from a local dealer. Definitely. But again, the mint has to account for production time and overhead. If you've ever had custom rounds or products minted, you understand how long it takes to receive finished products from the time you place an order. I think they're trying to get ahead of rising silver prices, but they do charge very high premiums, so local shops are definitely your best option for Proof Eagles. But if you look at what they're doing with that repricing, they're essentially projecting that prices will continue rising. They obviously don't believe silver is going back to $20. Exactly. And that's pretty telling about the current market environment. There's nothing particularly special about these proof coins besides the finish. Same ounce of silver. So it's quite telling that they're probably projecting much higher prices than we're currently seeing. What do you think about the US Mint repricing from your perspective? Do you agree they're anticipating continued price increases? It's one significant hint that we have a long way to go in this bull market. They have MBA-educated staff and research teams analyzing this constantly. So they're probably onto something. Like we discussed, they don't want to be chasing prices higher. They're positioning ahead of the move, but apparently they don't feel they've priced too far ahead of where silver is headed this year. That might be a real clue about our trajectory because these aren't uninformed people. They're master marketers of coins. Also, they can implement that kind of pricing, whereas a local coin shop probably couldn't because the mint has a captive audience. People actually subscribe to mint products similar to magazine subscriptions, where your Proof Eagle or whatever product you've subscribed to arrives automatically when released each year. They have a built-in customer base that auto-renews. Similar to streaming service subscribers, we typically don't have that advantage on the local level. You mentioned there's been extraordinary demand for silver. We have to discuss the refiner situation. I know we've talked about this in previous videos, but are refiners still refusing to buy 90% constitutional silver and sterling silver? Once again, the major refiners are rejecting anything alloyed, meaning if it's not 0.999 fine or better, they don't want it. Even in certain 0.999 categories, there are specific products they're declining. Make sure to drop a like on this video, comment with your thoughts on the refiner situation, and subscribe because this supply dynamic is critical to understanding where prices are headed. So they don't want to accept any of the small bars, like 1 ounce bars, 5 ounce, 10 ounce bars. They are purchasing the 100 ounce bars, kilos, and generic silver rounds. But anything that's alloyed, they're just turning it away completely. They're saying we're not buying it right now at any price. You're saying if you had an oversupply of constitutional silver from customers selling, you would normally sell excess inventory to refiners. But they literally won't buy it currently. They won't purchase it at any price whatsoever. And furthermore, for the products they will accept, I've heard 7 to 10 business days for payment with the firm we work with. But I've heard other dealers on various channels talking about having to wait 1 to 3 months for payout, even though refiners will accept the material. I don't know about those specific dealers, but that timeline would be devastating for our business because cash flow is absolutely critical to coin shops. We have to keep capital moving like a wheel. To have funds tied up for 10 days or 3 months, anywhere in that range, is extremely problematic. I can imagine as a business, you want payment much sooner than that. Think about it from an employee perspective. What if an employer said we'll pay you every 3 months or even monthly? It would create significant hardship. When we're purchasing the volume we're purchasing, we have to keep cash circulating, buying inventory, reselling it, restocking, and repeating the cycle continuously. So returning to demand levels, would you characterize this as the highest demand you've experienced at your shop? Absolutely the highest. And it's not just the factors we've discussed. As we mentioned in our last video, our neighboring state to the north just implemented a 10% tax on bullion transactions. It's absolutely devastating those shops. They're facing potential closure. Most are exploring alternatives, perhaps transitioning to sports cards or relocating across borders. We're receiving constant phone calls from that state. People are driving significant distances. We had one customer drive 4 hours from the northern border region just to purchase from us yesterday because he doesn't want to pay that 10% tax. Numerous people from cities about an hour north are making the drive. They simply don't want to pay that additional 10%. Why pay it in taxes when you can receive that value in additional metal? It makes complete sense. I think it's worthwhile for people to make that drive because they're getting more metal for their money. I really hope they eliminate that tax because it's destroying small businesses. If you have a coin shop where bullion represents a major portion of revenue and you're forced out of business just because of a 10% tax that someone thought was beneficial policy, I don't think that's fair to dealers who've worked very hard building their businesses. It's definitely not fair. And for customers traveling here, they could make it a full shopping trip since we don't have any sales tax at all in this state. Definitely worth making it a destination trip. And when you consider someone driving 4 hours, that individual and another customer from that state both spent the full $10,000 in cash that you can spend without triggering IRS reporting requirements. Think about that. Yes, they drove hours to get here, but if you spend $10,000 in their home state, you have to come up with an additional $1,000 in tax where you receive nothing for that money. It's really shameful government policy. I completely agree with that assessment. All right, one final question before I wrap up because I know you're going to be extremely busy today. Silver prices are rising. We're seeing new highs consistently week after week. Are we going to hit $102 silver? And if we do, where does the price go from there? Well, we've discussed how $102 is imminent. We've talked about the US Mint pricing substantially over spot for proof silver eagles. The world is not a peaceful place currently. The economy is not making people feel secure, even though they hear positive economic news that doesn't match their lived experience. All those factors combined aren't disappearing anytime soon. $102 represents this psychological barrier. Once we break through that level decisively, I think $165 happens within weeks, not months. Here's another consideration. Look at what it actually costs to buy a physical ounce right now. We're essentially already at $100 silver for American Eagles. Even for generic rounds, look at these prices. We've got generic rounds at $34. Before we continue, smash that like button, comment with your price prediction for silver, and subscribe because we're tracking this historic move in real time. That's only about a $1 premium, but if you calculate the percentage premium, that's an incredibly low premium for silver historically. The premium structure was very similar when silver was $9. It was around a 15 to 20% premium. Now it's approaching a 3% premium. It's starting to resemble gold premiums more than traditional silver premiums. There are positive ways to interpret this, but however you want to frame it, silver is very expensive compared to recent history, but you believe it could go significantly higher? $165 per ounce is realistic? Well, consider this. You did a live stream to mark the momentous occasion of $24 per ounce, and that was $10 ago. Look at where we are now. And how many weeks ago was that live stream? About 3 weeks. Not long ago at all, very recent. So we break through these psychological barriers and surge to the next one. After $102, maybe $165 is the next barrier we break through. Maybe it's $200. Who knows? We're only about $1 away from $102 right now as we're filming. But we've seen silver move higher than that in a single day during this current run. So we could be at $102 before you know it. It can happen today, tomorrow, but I think by the end of this week, we might see $102 silver. Think about current geopolitical situations. There are military assets being positioned in various regions. If certain events unfold, that alone will push prices past 102 immediately. As soon as those headlines hit, prices will surge. And honestly, gold at $2,870, we could see gold hit $3,000 before you know it. From a percentage basis, as unreal as that sounds, we're only discussing another $130 or so. These days, that represents about a week and a half of movement. We're definitely on our way. Now, before we wrap up, let me expand on a few critical points about what we're seeing in the market right now, because I think there are some really important dynamics at play that most people aren't fully understanding. Make sure you hit that like button one more time, drop a comment with which products you're buying right now, and subscribe because we're going to continue tracking this historic precious metals rally. First, let's talk about what's happening with premiums, because this is fascinating. Historically, when silver prices rise rapidly, premiums tend to compress as a percentage of spot price, but increase in absolute dollar terms. What we're seeing now is actually quite different. Premiums in dollar terms have remained relatively stable, which means as a percentage, they've compressed dramatically. Think about what that means from a market psychology perspective. It suggests that the supply chain, while tight, hasn't completely broken down. Mints are still producing. Dealers are still able to source inventory. But it also suggests that the price movement we're seeing is being driven more by investment demand and paper market dynamics than by physical shortage premiums. That's actually quite different from what we saw in 2020 when premiums exploded to $8, $10, even $12 over spot on basic products. Right now, Even though we're at much higher absolute prices, premiums haven't spiked to those levels. That tells you something important about market structure. Second, let's discuss what the refiner situation really means. When major refiners refuse to accept certain products, particularly constitutional silver and sterling silver, that's not just a logistics issue. That's a signal about their capacity constraints and what they're prioritizing. Refiners make money on volume and efficiency. They want to process large quantities of high purity material as quickly as possible. When they start refusing lower purity material, it means they're completely swamped with high purity material and can't handle additional processing complexity. That's actually a very bullish signal for the overall market because it indicates demand at the refinery level is overwhelming their capacity. Think about the implications of that. If refiners are backed up for weeks or months, that creates a natural supply constraint in the market. Dealers can't quickly flip inventory back to refiners for cash. That ties up working capital. It also means that when prices do pull back, and they will at some point, dealers might be more hesitant to buy aggressively because they know they can't liquidate excess inventory quickly. This creates a structural change in market liquidity that could amplify both upside and downside volatility. Third, the situation with the 10% tax in the neighboring state is a fascinating case study in how government policy can completely distort markets. You're essentially creating a price differential of 10% between two locations that are an hour or two drive apart. What does that do? It creates arbitrage opportunities. It drives business across borders. It damages small businesses in the taxing jurisdiction while benefiting businesses just across the border. But here's what's really interesting. It also might be changing the composition of who's buying precious metals. If you're making purchases below a certain size, that 10% tax might not be worth driving hours to avoid. But if you're making larger purchases, $5,000, $10,000 or more, suddenly that hour or two drive saves you hundreds or thousands of dollars. That's absolutely worth it. So you might actually be seeing larger average transaction sizes from customers coming across state lines, which changes the inventory dynamics. They're not coming in to buy one or two coins. They're coming in to make substantial purchases that justify the drive time. That could be contributing to the inventory constraints we're seeing. Fourth, let's talk about the psychology of the $102 level. Why is $102 so significant? It's purely psychological. There's nothing fundamentally different about silver at $99 versus $102 versus $105. But human psychology creates these barriers in our minds. Round numbers feel significant. We saw this with gold at $1,000. We saw it again at $2,000. Each time there was resistance, consolidation, and then once the level broke decisively, prices accelerated. The same thing happened with Bitcoin at 10,000, 20,000, and so on. It's a consistent pattern across all markets. So when we talk about $102 silver being a barrier that once broken could lead to $165 quickly, that's not based on some mystical property of the number 102. It's based on understanding that once that psychological level breaks, it changes the narrative. Media coverage increases, retail interest spikes. People who are watching from the sidelines decide they need to get involved. That surge in demand can become self-fulfilling and drive prices substantially higher in a short time frame. We saw exactly this in the move from $20 to $30. It happened relatively quickly once momentum built. Fifth, I want to address something about the US mint repricing that I think is being overlooked. When a government mint reprices products substantially above spot prices, they're making a statement about their expectations, yes, but they're also revealing something about their cost structure and supply chains. The US Mint doesn't mine silver. They don't refine it. They purchase blanks from suppliers. If their costs are rising to the point where they need to price proof eagles at $60+ when spot is $33, that tells you something about availability and premiums at the institutional level. It's not just retail premiums rising, it's premiums at every level of the supply chain. That's a much more significant signal than most people realize. Sixth, let's talk about what happens if we do hit $102 this week as predicted. What would be the immediate market impacts? First, media coverage would explode. Financial news channels would be running stories. Mainstream media would pick it up. That brings in a wave of new buyers who haven't been paying attention to precious metals, but suddenly see headlines about silver hits $100 and want to participate. Second, existing holders face a decision point. Do they take profits? Do they hold? Do they buy more? That creates volatility as different participants make different choices. Some will sell to lock in gains, others will buy more, expecting further upside. That push and pull creates dramatic price swings. Third, options and futures markets would see intense activity. Call options would be exercising. New positions would be opened. Volatility in derivatives markets would spike, which would feed back into spot market volatility. Fourth, physical dealers would see even more intense demand. People would rush to lock in purchases, worried about missing out on further gains. That would put additional pressure on already constrained supply chains. Fifth, mainstream financial advisors and institutions would be forced to address precious metals in their discussions with clients. Right now, many traditional advisors ignore precious metals or give them minimal allocation. But when silver hits three-digit prices, clients start asking questions that can't be ignored. Make sure to smash that like button if this deep analysis is valuable. Comment with your thoughts on $165 silver and subscribe because we're providing ongoing coverage of this historic market. All right, that's going to wrap up this in-depth discussion. Huge thank you to the dealers for taking time to share their insights during what I know is an incredibly busy period for them. If you're in the area, definitely stop by their shop. And for everyone watching, thank you for being here. Make sure you've hit that like button, left a comment with your biggest takeaway from this video, and subscribe to the channel because we're going to continue covering every major development in this historic precious metals rally. The next few weeks and months are going to be absolutely fascinating to watch. We're potentially witnessing history being made in real time. Stay informed, stay rational, and we'll see you in the next video. Take care, everyone.